Make sure you get independent, whole of market mortgage advice for your particular situation. Hi guys, and welcome back to the channel. I really hope you enjoyed last week's video, which you can find here, which was my five top tips for home buyers. Now this week, we're going to talk about mortgages. So mortgages all over the news right now. Interest rates are rising, they're becoming more expensive, they're becoming much harder to get. So in this video, I wanted to share my personal experiences on how my wife and I got our mortgage. Now when we first bought our house, we borrowed £341,000, and I'm going to talk you through exactly what we had to do for the 12 months previous to that to plan and set ourselves up to get the best mortgage terms possible. Now we were very fortunate to be able to buy with the Help to Buy scheme. We purchased a fantastic 4-bedroom dream house, detached, 3 bathrooms, 4 toilets, garage, home office, recording studio that I'm in now, 3-car garage, and we're extremely grateful, extremely proud, but it took us, I think it was 18 months of planning, financial planning, to make sure when the time came that we wanted to buy a property that we would get the best terms possible. And I'm going to talk you through 5 of those things we had to do, so hopefully it helps you. Now I have to add, I'm no mortgage expert. Make sure you get independent, whole of market mortgage advice for your particular situation. I'm just going to share my situation. There's a link in the description to the mortgage company that I work with and deal with and have helped lots of my clients. And if you need advice, click the link, book a quick 15-minute chat, and they would love to help you. Let's jump in. So if you're new to the channel, my name's Perry Power. I'm the founder director of Bespoke. We're an award-winning estate agency. We've helped thousands of people buy and sell property. We've sold over £300 million of a property. We've helped hundreds of buyers get mortgages, buy properties with mortgages. But in this video, I wanted to share with you my personal experiences for buying my first home. When I was 31, my wife was 29. We had 3 children. We've now got 4 children. I know, I don't look old enough. But I think to get real life advice rather than just hypothetical advice is really important. And I love sharing tips and tricks and experience. So if you're into property, buying it, selling it, investing in it, whatever, hit the subscribe button and the bell icon and you'll get notified when I drop new videos. So let's get cracking. So tip number 1 is a word that I didn't even know what it meant until it was suggested that I do it. So this is novation. So long story short, I had a car that I purchased on a lease, not purchased, but I leased a car for business use, but in my personal name, right? So I had to novate that car into my company name and into my company, take it off my personal liabilities. Now remember, with mortgages, the rate you get and what you're offered by which lenders is mainly based on risk. So the higher deposit you've got, the lower risk you're going to be, and so you'll get a better rate. If you've got good credit history, low debt, but you've shown that you can manage debt, you'll be lower risk, you'll get a better rate, and you'll have lower payments. So this is all about reducing my personal liabilities so that I wasn't using loads of my available debt. And so the lenders, when they look at your situation, they can see you can manage a small credit card, but you haven't got loads of debt in your name, which could potentially affect you repaying the mortgage that you're about to apply for. So this tip's all about novating anything you can. If you are self-employed or you have got a company, has to be legitimate. So it has to be actually a car that you got for business use, but you put it in your personal name stupidly. Novate that into the business, becomes a company car. Happy days, it's off your credit file. Moving on. Okay, so tip number 2. Now remember, these tips are based on exactly what I had to do personally and my wife. We were planning getting our mortgage for 12 to 18 months. It's really not as simple, and I would suggest everybody take this advice. It's not as simple as rocking up to the bank, applying for a mortgage and getting it. if you want to get the very best terms, you've got to do some real financial planning. And that was the advice that I got from my advisor at the time, and it worked wonders. And we're now so happy in our dream house. So tip number 2 is all around consolidate or clear. Now what I mean by this is clear as much debt as you can, obviously. If you've got some savings, I know it's hard because you've got to have savings maybe to clear some debt, but you've also need a deposit for your mortgage. But if you can consolidate some of your multiple debt agreements into one payment each month, that will help you a lot. Ideally clear it. So thinking back, I think we had a sofa on a lease. I think we had about 400 quid outstanding on it. We cleared that. Thinking back again, I think, just anything that you can consolidate into one payment, or there are multiple payments, even if you take out a loan potentially to clear the little payments, so you've got one payment each month, that helped us, that's for sure. When you go in shopping and you think, oh, I'll just get that on 0% interest, that's still a debt agreement. So try and consolidate or clear into one payment. It's also really important that you're using a low percentage of your available credit. So in my situation at the time, I think I had a £10,000 credit card and I had £8,000 against this credit card, and I cleared it. I had to clear it because it's really expensive, first and foremost, stupidly. We all make them mistakes and spend too much on credit cards at times. It's really expensive, and it goes against you when you're trying to get a mortgage. If you're using a little bit of credit, that's fine. I haven't got any credit card debt now, but thinking back to, I used to put my holidays on it every year, my petrol or diesel for my car, and then just clear it off. But when it comes to applying for the mortgage, I have to clear that entirely and just use a little bit of it to show that I can manage money, but I'm not grabbing every last penny that's available to me in credit or debt. Okay, so there's 2 tips on exactly what my wife and I had to do to secure our mortgage for our dream house. I really hope you found them helpful. The other 3 tips are going to be in a second part of this video because I really didn't want to do a really long video and to confuse the hell out of you. So subscribe to the channel, click the bell icon, you'll get notification as soon as part 2 is released, and I look forward to seeing you there.